Aloha everyone. So we all know that Maui's been through its fair share of challenges lately. Starting with COVID, and then the recovery from the Lahaina wildfires. Bill 9 is attempting to phase out nearly half of our short-term rentals, and most recently, we've got abnormal weather with intense storms and flooding. So with all that pressure, what exactly is happening to our real estate market here? Well, if you've been watching my channel, you already know that the condo market recently crashed 34% from its peak. But here's what's changed. Over the last few months, the charts are finally starting to level off. So the question is, have we hit the bottom? In this video, we're going to take a look at the most recent real estate statistics so you can decide for yourself. But before we get started, I just want to acknowledge that I know some people get really triggered by the word crash. And I promise I'm not trying to be an alarmist. But if you define a market crash as a decline of 20% or more in a short period of time, then yes, the Maui Condo market has definitely crashed, and here's the proof. This is a chart showing the median sales price for single-family homes and condos using a 6-month rolling average. The single-family homes are in blue and the condos are in red. I really like that the chart goes all the way back to 2006 to give us a long-term perspective. And as you can see, since 2012, the prices for both homes and condos have been steadily increasing until it reached its peak in August of 2024. At that time, the median sales price for a condo was $972,000. But the most recent bottom was $642,500 in January of 2026. And that's the decline of approximately 34% that I'm talking about. But if we zoom in, we can see it's been relatively flat over the past 5 months, and it's actually gone up slightly over the past 2 months. Now, of course, a few months does not confirm a trend, and this doesn't mean that prices won't dip even more. But I do think it's a good sign that we might be nearing the bottom. Now, here's another chart that's important to pay attention to. This shows us the number of homes listed for sale. Again, using the 6-month rolling average. As you can see, the inventory has definitely increased since 2024. But with a long-term perspective, you can see that from 2022 to 2024, we had an abnormally low level of inventory, and we're now just getting back to normal. Of course, more inventory combined with fewer buyers in the market means that those buyers have more negotiation power, and that's what this next chart confirms. This is a chart showing the average percent of listing price received compared to the actual sold price. And as you can see, back in 2022, condos were actually selling for more than their asking price. Since then, the average percentage of sales price has actually dropped to one of the lowest levels on this chart at 94%, which means on average, buyers are negotiating 6% off the listing price. And I've seen a lot of properties that are being discounted significantly more than 6%. But the bottom line is, smart buyers understand that the power balance has shifted, and there's usually room for negotiation. Now, a big part of why the condo market has been hit so hard, while the single-family homes are only down around 7%, is the new law that was created by Bill 9, which in its current form would phase out roughly half of Maui's short-term rental inventory. But here's what's really interesting. Even some short-term rentals in hotel zoning, which won't be affected by Bill 9 at all, have seen significant value drops. This creates a real opportunity for buyers to find strong deals on properties that are safe from the ban, and that will likely see increased demand if half the island's short-term rental supply disappears. There are several current listings that illustrate this well. I'm going to walk you through just one of them. This is Honua 719. It's a studio unit with an excellent ocean and interior courtyard view. Built in 2009, it's one of the newest resorts on Maui, and it's one of my favorite hotel zone condos on the island. Now, this particular unit is very easy to comp because it actually sold just a few years ago. The property is currently listed for $1.118 million, but this exact same unit sold for $1.575 million back in November of 2023. So the current asking price is over 29% below its market value from about 2.5 years ago. And this is just one example. I'll show you a lot more examples of great deals in some of my future videos, so make sure you're subscribed to the channel. Now, I already mentioned that Maui real estate has faced a lot of challenges recently, between COVID, the Lahaina fires, Bill 9, and recent flooding. But there's another factor that we haven't talked about yet that is pulling down the condo market. And that is higher mortgage interest rates combined with slower tourism and therefore lower rental income. I spend a lot of time crunching the numbers for my clients, and here's the bottom line. In our current market, if you buy a short-term rental with all cash, you can expect around 2 to 3% ROI on the rental income alone. But if you plan to use a mortgage, most buyers will need to put at least 50% cash down to break even on the rental income versus expenses. Just a few years ago, buyers could find cash flowing properties with the minimum 25% to 30% cash down payment. So it doesn't look like a very attractive option for buyers that are strictly looking for the highest return on rental income. However, I do think that it's inevitable that rental income will return to normal and interest rates will come down. So the numbers will eventually be more attractive to buyers, which will drive up the demand along with the values. I can't predict when, but I believe it's just a matter of time before that happens. But here's the thing, and this is important. Most people buying property in Hawaii right now are not purely focused on the rental income ROI. There are significant tax advantages to buying short-term rentals that can drastically reduce your tax burden. And of course, the biggest advantage is the fact that you can use the property yourself. You see, it's really about the lifestyle. And most owners and buyers genuinely feel connected to the islands. And there will always be a market for owning a piece of something that can't be replicated anywhere else on earth. That doesn't change because of a down market. If anything, a down market just makes it more accessible. So back to the question we asked at the beginning of the video, is this the bottom of the market? Honestly, I'm not ready to call it a bottom. A few months of flat prices is encouraging, and I do think it's a meaningful sign that the worst might be behind us, but a meaningful sign is not the same as a confirmation. We could see another leg down. Inventory is still elevated, buyer activity is still soft, and there are real uncertainties around Bill 9 and the broader economy. But that means the power balance has clearly shifted toward buyers in a way that we haven't seen in a long time. For the right buyer with a long-term mindset, that matters a lot. And I do think the best opportunities in the Maui real estate market right now are hotel zone condos, if you can negotiate a good price. Properties like the Honua studio I showed you are down 25 to 30% from their peak, despite being completely protected from Bill 9. If that law moves forward, as it's written now, and it phases out half the island's short-term rental supply, we can all agree that hotel-zoned inventory becomes significantly more scarce and likely more valuable. You'd be buying at crash-level discount into an asset class that could see a real supply squeeze. And if you can hold on to it for a long term, I think the upside in rental income and value appreciation is significant. But that's just my opinion. No one really knows for sure, but what I do know for sure is that some people will disagree with me. So let me know what you think in the comments. And in the description, I'll share a link to a page on my website that displays all the short-term rentals for sale on Maui that won't be affected by Bill 9 and are safe from the ban. That's a great way to get started, but if you're getting to the point where you really want to dig into what's possible, feel free to reach out to me directly. The best way to do that is to fill out the contact form on my website. I'll share a link to that contact form in the description as well. Tell me a little bit about what you're looking for, and either myself or somebody from my team will get back to you right away. Now, if you aren't ready to talk to a real estate broker yet, but you want to do some research to see what the rental income for short-term rentals look like for any property anywhere in the United States, I'll also share a link to a rental income calculator that I use to do my preliminary research for the areas that I'm not already familiar with. Now, if you appreciate the video, don't forget to hit the like button, subscribe for more honest updates about the real estate market, and share this video with anyone you know who would also find it helpful. I hope to see you all in the next video. Aloha.